What is up, y'all? What's going on? Round two, man. Excited to chat with you all again. I'm Wayne Anderson. I'm a mortgage executive at Southern First Bank right here in Atlanta and Buckhead. The bank is actually headquartered in Greenville, South Carolina, but my office is in Buckhead. As you all know, I specialize in no down payment, no mortgage insurance loans for first-time home buyers, people who are purchasing their second home. It doesn't matter. It does need to be your primary residence, but you do not have to be a first-time home buyer to participate in what I believe is the best no down payment product in the Atlanta metro, and really the best one that I've ever heard of. Okay. As I mentioned, that's what I specialize in, but I also do FHA loans. I do conventional loans as well, VA loans, bank statement loans as well. A lot of bank statement loans for small business owners here in the Atlanta metro. And I also do what are called debt service coverage ratio loans. Now, DSCR for short. Now, that's the topic that I want to discuss today. Atlanta, I believe, is one of the better markets in the entire United States, particularly in the Southeast, to purchase an investment property. Why? Several publications believe that the population in Atlanta will grow by 1.8 million by the year 2050 and will make Atlanta the sixth largest metro in the United States of America. Number 6. That's huge. Huge. So for folks that own property in Atlanta, that's exciting news for us. For folks who aspire to own property in Atlanta, hopefully that's inspirational and exciting for you as well. Okay? So today, again, what I want to talk about is the investment market in Atlanta, and in particular, the different types of loans that that an investor can use to purchase real estate here in Atlanta. Okay, so let's say you own a primary residence, you own a secondary home at the beach somewhere in Destin, Florida. You're super savvy. You understand real estate. You understand what it looks like to purchase and finance a property, and you want to purchase an investment property. You're ready to get into that aspect of your real estate portfolio, which is cool. Thumbs up for wanting to do that. As I mentioned before, and I'll reiterate that, and I may repeat myself on some of these videos, there's 3 main things that a lender is looking at when you're looking to purchase a home. The first thing is they're looking at your credit score. Credit score is going to indicate to them which programs you qualify for. The second thing is your debt to income ratio. Debt to income ratio is important because these programs are going to have max debt to income ratios, which take a look at what are your debts compared to your income, what are your debts on the credit report compared to your verified income. We got to be able to verify it. You can't just verbally give it to us, but we got to be able to verify it and document that income. The lender understands that you've got other bills, right? You've got other household items and expenses that you've got to take care of. So what they're saying is, here's the max amount of your income that we are willing to lend against, essentially, right? So you're going to have a payment that's associated with this mortgage. And then, like, you've got all these other expenses. You've got your car note, you got student loans. Now you're going to dump a mortgage on top of that. Here's the ratio, okay, of your debts, including this mortgage, that we feel comfortable with compared to your income. Okay, every program is going to have those guidelines. Debt service coverage ratio loans do not have debt to income ratio requirements. Let me say that again. That's really big, and I hope you catch that. Let me lean in a little bit. Make sure y'all heard that. Debt service coverage ratio loans do not have a debt to income ratio requirement. Okay, let's take a step back. If you were to buy an investment property, which you can do, it's fine. What they're going to do is they're going to take a look at your credit score first and foremost. They're going to take a look at all of the debts that you have that are reporting on their credit report. So if you did not pay cash, your primary residence has a debt associated with it. There's a mortgage there. Your second home in Destin, Florida, on the beach, has a mortgage associated with it. So now you want to buy a third property, and so they're going to look at all the existing debts that you have, and then they're going to take the mortgage from this third property that you're looking to buy, and now it becomes a part of your debt profile. And you're going to compare that to the income that you have. DSCR, debt service coverage ratio loans, are so popular because of the three components of credit score, debt to income ratio, and then what money do you have? Do you have the funds to close for the down payment and closing costs and things of that nature? Debt service coverage ratio loans only look at two things. What's your credit score? And do you have the funds to afford a 20% down payment, 15, 25, going to be somewhere in that range of 15 to 25%. And also, do you have the funds for closing costs? Okay. That is exciting because they're not going to look at all of the debts that you have compared to your income. They're only going to look at, does this property cash flow enough to satisfy the new debt that you're about to have? Let me give you an example. That's what the ratio is. So for example, if you purchase a property and it's $300,000 and the mortgage payment is $2,500, let's just use some round numbers for example. What the lender is going to do is they're going to look at what's called a 1007 appraisal. With that appraisal, they're going to look to see, does the rental income satisfy this debt that you have now? Rental income and this new debt. So if the rental income comes back at $3,000 a month, based on this appraisal that they do, they're going to look at rental comps in the area and to see what are people paying for rent. If it's $3,000 and your mortgage payment is $2,500, you're good to go. That's why DSCR loans are so popular, because you can do that over and over and over and over again, as long as you have the assets to cover the down payment, okay, and the closing costs associated with that property. No down payment, no PMI loans is what I specialize in, but I also do FHA, I do conventional, and I do DSCR loans as well. If you are a savvy investor or you are a new investor, I always encourage people to take a look at DSCR loans, because as opposed to you going and buying a $300,000 property and paying cash for it, you could use those funds as a down payment, okay? And also for the closing costs to go and purchase $1 million worth of real estate, $1.2 million worth of real estate, okay? So it's really, really important. I'm gonna try my darndest, as hard as I possibly can, to go into more depth with each one of these loans. But I just want to give you a snippet. Okay, today we covered DSCR. We're going to talk about FHA. We're going to talk about conventional loans. We're going to talk about VA loans. But today's topic is DSCR. Okay, please, people, these loans are increasingly becoming more and more popular because an investor can come in and quickly get in a transaction. They don't have to show all their tax returns to show how other properties are cash flowing to cover and satisfy debt. No, credit score, funds to close. You can buy property and there's no cap, okay? You can even do this as a first-time investor as well, okay? If you like this, please like the video, subscribe. I'm gonna have my contact information below so you can reach out to me if you have any questions. You just want to run some ideas by me. The purpose of me creating this platform really is for educational purposes, and it's also for conversational purposes. I want to talk to people. I want to get your thoughts. I want to get your ideas. I'm not going to have the answer to every single question, but I do know the folks that do have the answer. So let's keep the dialogue going. Let's keep the conversation going. Look forward to working with you. Again, it's Wayne Anderson, Southern First Bank right here in Atlanta. Let's get these investment properties, y'all.